Welcome back. Markets have spiked up. We've recovered more than 100 points from the day's low. The Nifty and the Sensex are currently in the green, led by strength in HDFC Limited as well as HDFC Bank, as well as the two IT majors, TCS as well as Infosys. Just take a look at the intraday charts of these four heavyweights and you would see it's mirroring the up move that you can see on the Nifty. Apart from that, outside of the index, Advanced Enzymes, a stock, the management that we were earlier talking to on Trading Hour, the stock has now gained close to about 5% in trade. One thing perhaps the street may have liked from the management interview is the company's margin guidance. If you remember, in Q4, margins were at about 30%, but what the management told us that in Q1, that's in the June quarter, margins will be subdued, but Q2 onwards, they're expecting a very sharp recovery in margins, and margins could go back to that 40 to 43% band. So that's perhaps explains the up move in Advanced Enzymes. But let's get back to Davos, where Shireen Bhat is in conversation with the rest of the CII panelists.
Now, $1 trillion expectation and aspiration on merchandise export by 2030, and similarly for services as well. There are several changes that have happened, several reform measures that have been undertaken. The production-linked incentive scheme across 13 sectors is one initiative of the government to attract investment across sectors, specifically the manufacturing sectors. And there are also changes on the way as far as climate security is concerned. We are now transitioning towards renewable energy. Aspirational targets have been set there as well. For green energy, we've got the first installment of a green hydrogen policy that the government has put in place as well. And as Sanjiv was talking about the tech stack in India, digital transformation is a theme that's playing out across sectors. Record digital transactions courtesy UPI that we're seeing. And of course, the government has put in place platforms like the GEMS platform, and now for e-commerce, the ONDC platform as well. So several measures being taken there and plenty to talk about. But I'm very mindful of the fact that this is Davos and everybody's got minute-by-minute engagement. So let me get straight to it. Minister Goyal, let me start by asking you, sir, you laid out the roadmap of what we should expect in terms of Trade 4.0. You also highlighted the near-term challenges that the global economy is faced with, and those impact us in India as well. You pointed out that several measures have already been taken to try and address those concerns, to try and rein in inflation. The expectation is that there will be more short-term measures there to try and bring down inflation by another 60 to 70 basis points. What can we expect, sir?
Well, you certainly know that you're not going to get any response on that. I don't know. The times are changing. They're turbulent times. And we'll have to respond. The good part is we are not dinosaurs. We are not dinosaurial in our government. We take action when it is called for. We take swift action, but we also take confidential action.
Okay. I will leave it at that, but perhaps we should expect more measures on that one. You talked about trades and you laid out a very ambitious target of $1 trillion in merchandise export by 2030, and similarly for services. And several changes have happened along the last few years to ensure that we've got to a record number on export. What more can we expect? I highlighted some of the measures that the government has taken to try and boost export, to try and boost manufacturing. What are the next sequential steps that we can expect to try and get us to the $1 trillion aspiration that you've set out?
Before I come to that, I must say one thing. All of you in Indian industry can also support the government so that we don't need to take too many steps. So a little bit proactive approach by Indian companies, by Indian sectors on their own to ensure that we can all work in an orderly fashion, ensure prices are low, will actually save the government from taking any formal steps, but will help all of you in the long run. For example, if infrastructure projects get totally delayed, or are slowed down because of very high prices for the inputs that go into infrastructure. Ultimately, your business will suffer in the long run if stagflation sets in, or if infrastructure spending goes down. Your projects will suffer in the long run. So we have a crisis before the world, a short-term issue to be addressed, and I would urge Indian industry also to reflect what they can do to ensure that commodity prices or our people do not suffer the consequences of high inflation. Coming to the point that you asked, madam, I think one thing I'm very clear, having looked at trade and commerce over the last 3 years. And by the way, this week we complete 3 years of our second term. So 8 years in government now. A very exciting journey, lots learned in the 8 years. I hope lots done also, but that's for you to tell us. But I think I've learned one thing, that Indian business does not want subsidies, does not want clutches. Indian business has the ability and the strength to be able to perform well, to work with the rest of the world. And as I said earlier, I do not believe you can artificially support a sector to be in the long run a relevant player in the world. Ultimately, sectors where we have strength will grow, for which the government is looking at easing your business processes, reducing your regulatory burden, making it simpler to work in India, making it easier to get land, approvals, getting rid of many of the criminal sections of the Indian laws, getting rid of compliance burden wherever it's onerous. And my own sense is businesses want handholding and support of that nature. Subsidies in the short run can support you, can give you a kickstart. But in the long run, they become very, very routine. The virtue of subsidies is only when it's swift and in the short run, something like the production-linked incentive scheme, where we are giving a kickstart to help you invest, produce, meet your early years concerns, and then you can fly on your own. Our approach is not going to be driven by subsidies or artificial promotion of our trade. It's going to be much more focused on structural reform and ease of doing business.
So you highlighted the fact that the government doesn't intend to roll out subsidies, and you brought up the production-linked incentive scheme. As I pointed out, 13 sectors where we have seen the PLI schemes being put forward. We've also got now a comprehensive semiconductor policy that the government has very recently unveiled. So I want to understand from you, outside of what has already been done, what will be the next focus sectors? Can we expect the next round of PLI, for instance, or a semiconductor policy like a policy for other sectors?
You know, we, as I said earlier, we are responsive to the need that comes before us. By and large, we had decided these 15 sectors, APIs and medical devices was done earlier also, and mobile phones. Yes. So about 15 sectors. But by and large, identified them through a very transparent process in which CII, FICCI, all were very active participants. Rather, the scale committee, the steering committee for advancement of localization and employment, was totally run by the private sector. We had CII, PhD Chamber of Commerce, FICCI, ASSOCHAM, other regional bodies contributing through their time. Pawan Goenka led it. We in government were only support services. You identified the sectors. You told us where the cost discrimination is there, which we need to plug, at least for the initial period. And therefore, this has been totally an industry-led initiative, and very democratic process was run.